दलाल स्ट्रीट में लक्ष्मी माता की पूजा दिवाली की शाम को होती है, बट सरस्वती माता की पूजा रोज करनी पड़ती है, तब जाके लक्ष्मी माता की कृपा प्राप्त होती है।
Mr. Nilesh Shah, Managing Director of Kotak Mahindra Asset Management. With over 3 decades of experience, he manages over 6 lakh crore in assets and has worked with organizations like Axis, ICICI Prudential and Franklin Templeton Asset Management. He also serves on the Economic Advisory Council to the Prime Minister, bringing depth to some of the toughest market conversations in the country. In this episode, we deep dive on common mistakes investors should avoid, how wealth truly compounds, and where India's biggest investment opportunities lie. What behavioral mistakes you think investors are making today?
The biggest mistake investor makes is they don't recognize themselves. They take risk when the momentum is good rather than what they can afford. Are you risk taker? Are you risk avoider? प्रॉब्लम ये होता है कि तेजी के मार्केट में कंजर्वेटिव गाय को लगता है कि मैं रिस्क टेकर, he takes more risk than he can afford, pays the price.
Given that India itself has a lot of opportunity, still does global diversification make sense?
Undoubtedly it makes sense. We have two neighbors, China and Pakistan, with which anything can happen. Low probability but high impact event. In that scenario, whatever you invested globally will be protected.
Given what's happening with the currency, how should investors think about the currency risk?
At this point of time, we believe India's currency will continue to.
Welcome to the Compounding Mindset, Mr. Shah.
Thank you, Neil, for having me here.
You've said the investors clean the mirror when the dust is on their face. What behavioral mistakes you think investors are making today?
The biggest mistake investor makes is they don't recognize themselves. They take risk when the momentum is good rather than what they can afford. When momentum slows down, those risks come and hit you. Second, they don't maintain equilibrium between risk and the fear, between greed and the fear. But everything can be boiled down to one thing. Many decades ago, when I had lost money in trading, one elderly gentleman had given the right advice कि देख बेटा, दलाल स्ट्रीट में लक्ष्मी माता की पूजा दिवाली की शाम को होती है, बट सरस्वती माता की पूजा रोज करनी पड़ती है, तब जाके लक्ष्मी माता की कृपा प्राप्त होती है. To earn the blessings of Lakshmi Mata, one has to pray to Saraswati Mata every day. Knowledge is the best solution for earning money. If people know, then they will not commit mistakes.
Yeah.
And making less mistake itself is a way to make money.
Right. So, what do you think people can do to gain that knowledge?
I will say that today knowledge is available in many places. There are podcasts like this. There are books which people have written. There are blogs which people are writing. So there's enough material available. But many a times when you don't have time or ability to understand that, then you go to an advisor. I'm not good in medicine. I go to a doctor. I'm not good in drawing or building. I'll go to an architect. Same way, for your financial well-being, you need to go to the advisor.
Yeah, I think Sarthi zaruri.
Sarthi zaruri hai.
So, a lot of time I feel people don't have clarity about their financial goals. At times, they are investing in equity for goals which are in 3 or 5 years. And they end up investing in fixed income for their retirement via a lot of long-term products. So this is a little misalignment. How would you look at it, and what would your advice be to people who are investing for some short-term goals or medium-term goals or some long-term goals, how would they go about, looking at their portfolio?
So ideally, for shorter term goals, you don't want to take too much of a risk because capital preservation is key. For a longer term goals, you want to take risk because you want to outperform inflation. Now, when you are investing, you have to be ready for failure. I mean, if you are a cricketer and you assume that every ball I will score or every inning I will score a century, well, the best batsman of the world, Donald Bradman, also didn't have a triple digit average.
Yeah.
He was also double digit average. So you have to inbuilt failure into your investment journey. Short, medium, long, you build your portfolio depending upon capital preservation versus inflation outperformance. What you need is a real return.
Right.
I mean, just see as a country, the total mutual fund AUM is about 80 lakh crore. And we have increased investors' money by a significant margin. So actual investment in mutual fund at principal level will be less than maybe 30 lakh crore.
Crores, yeah.
And on this, people have generated returns for 5-year, 10-year, 15-year, 20-year, 30-year. The currency notes in circulation in India is 40 lakh crore. You make zero return over there.
Yeah.
In fact, in real sense, it's a negative return because every year inflation goes up, your currency depreciates. Collectively, people have kept more money in depreciating assets than appreciating assets.
Yeah.
So these are the kind of mistakes which people make because they are not able to decide when they need capital preservation, when they can afford risk, and where they should be focused on beating inflation.
I mean, when you marry your investing with this clarity of capital preservation or capital growth, that objective, I think that itself will help them make lesser mistakes and actually align their investing or with their real life situation rather than just some bookish kind of formulas on asset allocation or something. A lot of investors, or that's how equity markets function, that at the peak of the market we get a lot of money and a lot of new investors come in, and then say if they have to go through a downturn of next 18 or 24 months, or if they see a 30% drawdown in their portfolios, what would your advice to such investors be?
So my first advice will be, do you know yourself? Are you risk taker? Are you conservative? Are you risk avoider? Now, I have to play according to what I am.
Right.
If in the COVID time you bought, that means you are risk taker. You play accordingly. If in COVID time you sold, you converted notional loss into real loss, you are conservative. Play accordingly. And if in COVID time you just continued what you were doing, neither bought nor sold, then you are average. Then you play accordingly. प्रॉब्लम ये होता है कि तेजी के मार्केट में कंजर्वेटिव गाय को लगता है कि मैं रिस्क टेकर हूं. He takes more risk than he can afford, pays the price. So you need to be aware of who you are. Second, what are your goals while you are investing? If you have short-term goals, you invest in accordingly. If you have long-term goals, you invest accordingly. Now, most people will have short, medium, and long-term goals. Your portfolio then should reflect that. अगर आपका गोल ये है कि मुझे मैक्सिमम पैसा बनाना है, well, that's not the goal. It's not going to help you. You'll have to define that. मुझे मैक्सिमम पैसा क्यों बनाना है? कल छुट्टी पे जाना है इसलिए, 1 साल बाद गाड़ी लेना है इसलिए, या 50 साल बाद रिटायर होना है. The asset allocation profile for all 3 of this will be totally different. So know yourself, find your objective, and then follow the process.
Yeah, I think when investors come to us, we always talk about putting a purpose first
Yep,
to your investing. And once you have clarity on the purpose, then I think the portfolio can much align better which asset class to pick. And like you rightly
absolutely.
said, that it's the asset allocation and your objective which will depend on what kind of a
Yep.
portfolio you end up investing in. So, what would your advice to be for investors who just look at past returns and end up investing in something which was flavor of the season in the last 2-3 years? How should they go about not being trapped into this recency bias and build a robust portfolio?
So again, if you want to follow momentum, go ahead and do it. But then momentum requires some sort of discipline, either discipline of long term
Yeah,
or discipline of stop loss.
right.
You decide which you want to play. More importantly, always remember form is temporary, class is permanent. There will be many cricketers who can, score 10, 20, 30 runs very quickly.
Quickly.
But you require certain set of class to score century after century consistently. Now, every top batsman also gets out at zero once in a while.
Yeah.
Sometimes they have a bad series also. So always focus on class rather than just the form.
Right.
Form is temporary, class is
Class is
permanent.
permanent. Right. So I think for investors who are just looking at past returns and investing, like you said, that they either need to have a very long time horizon, because what worked in the last 2 years is not necessarily
Yeah.
going to immediately work in the next 2-3 years. Maybe if you give that time, you may still
Yeah,
be on a
everything
positive
is
set.
cyclical.
Yeah,
Cycle will come back.
Yeah, the cycle will come back. Yeah. We've been looking at a lot of portfolios in the last couple of years, and we have investors come with 30 schemes, 50 schemes, and there's a huge overlap in their portfolio. What would your advice for those investors be? What do you think would be an ideal portfolio? How many funds to have? What kind of diversification is ideal?
So I have invested across every single scheme managed by Kotak Mutual Fund. But that's regulation. It's
Yeah.
not my choice.
Right.
Now imagine I, being the CEO of the Kotak Mutual Fund, does not invest in all my schemes by a choice.
Right.
I'm investing only by a dictator. That clearly shows that you don't need to invest across all the schemes.
Yeah.
Mutual fund investment, like stock, are like kids. Don't raise more than what you can afford to manage.
Right.
Now, whether 5 is sufficient scheme or 15, I don't know the answer. But certainly 50 is too much, that much I am sure. And 5 will be too less, that much also I am sure. Now, between 5 to 15, 20, 30, 40, 50, whatever number you think appropriate. But you must observe, manage, and track. It's not buy and hold. It's buy, observe, and hold.
Right. So you would have started with a certain portfolio. You have to regularly monitor it.
Absolutely.
And then some things which you feel aligns with your goals, your risk-taking ability, your time horizon, you continue to hold that till your goals come. And you
Absolutely.
probably wean off the funds which you feel doesn't align
Yeah.
to your either risk profile or to your investment objective, time horizon. I think that's where you decide to maybe exit and then make a concentrated portfolio of schemes which you feel would work for you in the long
Yeah.
run. If investors could control one variable which would help them compound wealth in the long run, what would that one thing be?
So the biggest thing is equilibrium.
Right.
I don't become greedy. I don't become fearful. I maintain equilibrium. I think Sir John Templeton mentioned that it takes tremendous courage to be greedy when everyone else is fearful, and to be fearful when everyone else is greedy. But that's the hallmark of making money.
Money. Yeah.
So equilibrium.
Yeah, I think that balance, if investors can strike, where they're not at any extreme. whether markets are bullish or bearish. And that is too difficult. It's easier said than done.
It's always
Maintaining
easy
that
to say,
kind
but
of
very difficult to
yeah.
do.
So maintaining that kind of balance and temperament at each extremes of
Yeah.
market is not easy. What do you think is the compounding mindset?
Compounding mindset is like plant a seed in the right mitti, water it regularly, and then observe it grow. You have to observe, you have to intervene when the weeds come out. You have to ensure that you put fertilizer in it. You have to ensure that you water it regularly. But you just observe it. That's the compounding mindset. Planting a small seed and waiting for the tree. Investment भी वही है.
Right. So I think that patience to let that seed grow into a tree, and like you rightly said, that regularly checking on
Absolutely.
what is required. Sometimes fertilizer, sometimes more water.
People remember buy and hold. In between the most important pillar, observe, they forget.
Yes. So I think that itself is also important for the
Yeah.
compounding to work. When you imagine Viksit Bharat 2047, how would India look like at that time? And what do you think India needs to get right for that vision of 2047 Viksit Bharat to be a reality?
So for India to be Viksit Bharat at 2047, it should be a shared dream of 1.46 crore India, 1.46 billion Indians. While everyone wants Viksit Bharat, everyone will have to work for Viksit Bharat. If we all believe that Prime Minister Modi will work because it is his vision to make India Viksit Bharat, it won't happen. If there are people who keeps on laughing at Viksit Bharat vision, it won't happen. But if 146 crore Indians work together to achieve Viksit Bharat, it will happen even earlier. So we need to come together and we need to work together as a shared dream. And that Viksit Bharat should be a Bharat where there is growth, there is inclusive growth. And as someone mentioned, सारे जहां से अच्छा हिंदुस्तान हमारा.
Given the opportunity which we have in India, what is your view on global diversification? Because in the last 4-5 years, investors are talking about investing overseas and the whole overseas remittance. The funds have to accept overseas investments and then suddenly pause because so many investors want to diversify globally. What is your view on this? Given that India itself has a lot of opportunity, still does global diversification make sense?
Undoubtedly, it makes sense. The first is geographical diversification. We have two neighbors, China and Pakistan, with which anything can happen. Low probability but high impact event. In that scenario, whatever you invested globally will be protected. The second is business need. There are so many businesses globally which is not present in India.
Right.
We don't have a listed semiconductor play. We don't have a company like Google, Apple in India. To invest into such businesses, you have to invest overseas. And finally, it could be personal need. Someone wants to send their kids abroad for education. Someone wants to probably go out for a vacation. So in all those kind of scenarios, you will require a diversification which can be achieved through overseas investment. Now today, mutual fund schemes have reached their $7 billion limit, and hence you won't be able to go higher than that. But LRS options are open. Funds routed via Gift City is also open.
Right.
So you should be able to invest accordingly.
Yeah. So I think investors can explore investing via the Gift City and under the LRS limits which are there. So apart from mutual funds, there are options which they can explore
Yeah.
To invest globally. And like you rightly said, that global investment should form a small part of your portfolio, a small percentage of your portfolio should be invested or diversified
Sure.
globally, given the kind of scenario we are surrounded with. Given what's happening with the currency, how should investors think about the currency risk?
See, as an Indian, rupee is not the currency risk for me, in the sense that, of course, it impacts me because my dollar value of asset comes down. Inflation goes up if rupee depreciates. But other than that, it doesn't impact my calculation. My rupee return is not impacted by dollar movement. At this point of time, we believe India's currency will continue to depreciate because our inflation remains higher than our peer group and our productivity is lower than our peer group. In that scenario, please build in 2 to 4% depreciation of rupee in the foreseeable future. For rupee to appreciate, our inflation should be lower than our partners and our productivity should be higher than our partners. Both of those things is unlikely to materialize in the medium term. Long term mein hoga to nasib, but medium term it doesn't look likely. So 2 to 4% depreciation of rupee looks quite plausible.
So, in that scenario, for people whose kids would want to go to study abroad, like you said,
I mean,
a global portfolio, a small
please
amount
build
of
dollar portfolio.
please build something in dollars, given that what expectation we have with the rupee.
Yeah.
So there's a lot of talk around AI disruptions and AI eating up jobs. And overall, we've seen like the tech industry, we've seen lows, what we've seen in the last 5 years. So what is your view on AI? And do you really think it's going to eat up jobs, or it's going to be really disrupting for the tech companies?
So undoubtedly AI is real. Like industrial revolution, like internet, AI is here and it will change everything. At this point of time, we believe there will be winners and there will be losers. Winners will be companies which will empower their employees with AI, helping create better, cheaper, faster solution for their customers. Losers will be dinosaur whose tail is on fire, but the head takes time to recognize it. And by the time head gives signal to take corrective action, fire is already spread. So there will be dinosaurs who will become extinct, and there will be winners who will change the orbit to the next level. It will be extremely important as fund manager for us to identify who will be winner and who will be loser. Every company is saying that we are going to leverage AI. No one is going to say that, oh, I don't like AI, I'm not leveraging it. But which one adopts faster? Which one is more responsive? That will determine the success versus failure. It's not just about AI adoption, but at a faster pace than peers and at a lower cost than peers. That is the key to success.
Right. So I think AI is definitely a reality. And in this, the agility, like you said, someone who looks at it and adapts it the quicker and at probably a cheaper cost is what who will end up winning in this whole AI thing. What about jobs? Like people or investors are fearful. Like we get a lot of inquiries that I'm in IT and I may lose my job in 12 months and I have this amount of corpus. How is it that I basically plan an emergency fund, or how would I plan my retirement given this kind of volatility or uncertainty which tech employees are seeing right now? So any particular advice, how do they navigate these difficult times?
So when the computers came, the jobs of typists disappeared. But people who knew how to operate computer, their jobs and market value went up.
Right.
So one, if you are going to be impacted by advent of AI as a coder, as a software developer, better learn AI so that you have an alternative career. Number 2, सितारों से आगे जहां और भी है, Very recently, a friend of mine told me that his daughter, who was doing a routine finance job, decided to leave the job and pursue her hobby and converted that hobby into a profession. He says, earlier I was worried that why are you pursuing hobby and not pursuing a regular job? But after AI, I'm confident that no, she has taken the right decision. Anything which is creative, anything which will require human touch will not be replaced by AI. Or maybe it will be replaced much lesser by AI. So ensure that you are able to be creative.
Right. So I think upskilling is what you, if you are
Is
someone
needed.
who's already in tech, you better upskill. And probably if you are in professions which are creative, because creativity easily can't be replaced by artificial
Yes.
intelligence. So I think these are the two areas which people should start focusing on in case if they feel they are caught in the midst of
Yeah.
this whole AI thing. 1992, you had nearly lost everything. What was that blind spot which you missed? And you still see retail investors getting into that trap even today.
So I believed I'll be able to become rich overnight. I'll follow the tips of the people and then I'll be rich. लालच ने इतना अंधा बना दिया कि कुएं में गिर रहा था वो पता नहीं चला. गिरने के बाद समझ आई.
Okay, so you still feel retail investors are overpowered by greed at times in their decision making with
Neil, it's
investing.
not retail investors alone. After spending 3 decades in market, do I become greedy? Answer is yes. Do I become fearful? Answer is yes. As humans, we won't be able to give up our emotions. All we can try is to be aware that we could be greedy and we could be fearful.
At one point of time in the bull run, you had borrowed capital and invested all in before the bull run. Did that incident change your perception about risk in any ways?
Undoubtedly. ठोकर खा के आदमी में अकल आ ही जाती है. But it's better to learn from others' experience than commit mistake, pay the price and then learn. So post that experience, when I entered market again, the first focus was always on risk management. Fortunately for me, I worked in organizations like Templeton, Prudential, Kotak, where the emphasis on risk management is far, far ahead. Obviously, times changes, techniques also have to change. But now, risk-adjusted return is something which is driving all of us as institution as well as an individual.
I think for whatever events that have happened in the last 15, 18 months, I guess everyone has understood the importance that risk is a priority over returns. And once you
Absolutely.
have controlled risk, returns would take care of itself when markets, are like in euphorism.
And there's a perfect example of when you don't manage risk, what can happen. So Arceus Capital, Bill Wang, lost about $20 billion in 2 days trading. He was so leveraged that once something went wrong, it was a complete downhill. Now, he would have taken years and decades to build his company and $20 billion net worth. And he disappeared it within 2 days. That's the importance of risk.
Risk. Today, you are accountable for lakhs of crores of money. Do you sometimes get sleepless nights?
Undoubtedly, yes. It's not about managing money which gives us a stress. I started with 35 crore fund. I managed 6 lakh crore. That burden has grown. That responsibility has grown and we have never felt the burden because we were always carrying it. What gives us sleepless night? We are also managing dreams and aspirations of 70
Yes.
lakh investors.
Yeah.
what if my delivery is short of meeting their aspirations? What if my conduct is meeting short of their expectation? And that does give sleepless nights, because there is a fine line of walking between conflict of interest. As money manager, we are responsible for taking decisions in protection of our unit holders' interest. And many a times you have a sleepless night, that are we meeting expectations? Are we setting right expectations? And which is why a lot of focus goes in connecting with investors. If you see our message, last 30 years the message has remained the same. Invest regularly, be a long-term investor, and be a disciplined investor. Use asset allocation. Other than this three message, we haven't delivered any other message. But it is important to be on public platform so that we can set right expectations.
I can only say that from 35 crore fund to now 6 lakh crores, I am very sure many things have been done right, and that frameworks and all what we spoke about. That's the reason investors have rewarded you with trust. And I'm sure that sleepless nights which you are talking about, you have been so mindful about managing the public money, and so lakhs of people have trusted you with their aspirations and with their future, with their goals and all. Kotak now managing over 6 lakh crores. What do you feel is a core investment framework of Kotak which doesn't change irrespective of whatever market does?
So long back, one investor had told me that, Nilesh bhai, आप वो गलती मत करिए जो मैं खुद कर सकता हूँ. When I'm coming to you, I expect a professional behavior. बाकी गलती तो हम खुद ही कर लेंगे, आपकी क्या जरूरत है? So the first basic thing for us is that we have to act professionally. I have to invest in real business. I have to have my scenario on real life events rather than theoretical prescriptions. I can't be so arrogant that मैंने जो बोला वही सच. When facts change, we have to be humble enough to change our opinion. That's professional behavior. The second is, I'm in the business of managing trust. Money is incidental. If I have your mind share, I'll get your pocket share, and for a longer period of time. But if I don't have your mind share, then how long I can retain your pocket share? Whatever we do should result into enhancement of investor trust in us.
Right.
So if our behavior is trustworthy and our approach is professional, I think we have done our job.
And market, irrespective of how the market behaves, anything which you feel you do differently, which is not reactive to how markets go up and down, or for any kind of events which hit.
So will I be able to predict event? Answer is no. I went to last week meet one of the world's largest institutional investor. And as usual, my first question, "Saab kya lagta hai?" And he said, look, we don't forecast anything. We can only suggest reaction to the events. That is in our control. And I think it was re-emphasis of what we have been following, that I am not in the business of predicting future. I am in the business of ensuring that my reaction to the event is reasonable. I change my opinion when facts change, and I behave in a trustworthy manner. So when markets are correcting, one could have said, oh, you should have been in cash.
Yeah.
You knew this war was happening, market was correcting. Well, that's not in my hand. What I can do for being trustworthy is connecting with my customers. I'm available to answer their question 24/7 when chips are down. I should be meeting them, advising them, counseling them, connecting with them to give the confidence that ye din bhi nikal jayenge.
Yeah.
That's what we can do.
When constructing a portfolio, do you begin with top down or bottom up? And does this change when you find markets are overheated?
So when investing, there is a framework for each fund which we manage. It defines our boundaries. Some boundaries are based on statutory regulations. Some boundaries are based on internal regulations. We believe we have to bet big when we are confident and lie low when we are not. So if my fund manager and analyst both have a consensus call, they do take overweight position by a margin. If they both are contradiction to each other, the position limit comes down. Number two, there is a team of analysts which does bottom-up research. There is also fund manager who think top-down approach and weave both bottom-up and top-down to build their portfolio.
Right.
Those portfolio go through the filter of various risk parameters, concentration risk, divergence to benchmark, liquidity risk, reputation risk, so that overall once the portfolio is built, it delivers optimum risk-adjusted return. And then there are scenario testing in terms of stress test, especially on fixed income, but certainly on equity, on liquidity side. So it's a process which continues to work. Every fund manager knows what are the boundaries in which they have to play. It's kind of symphony which is being played out because each player knows what notes they have to play.
Right. So I think it's more about working out of a framework and each one playing their part, whether it's
Absolutely.
top down, bottom up. And as collectively as a team, the idea is that you have to win, whatever you set out
So
for.
we want to create a symphony, not a solo music. Now, if each player starts playing solo, it's unlikely to create a symphony. But once the notes are given to everyone, they know what music they have to play. I have to ensure that I continue to build the stick so that it's symphony and not noise.
Exactly. So I think this is what the investors should be looking for when they decide to trust their hard-earned money within asset management company, the framework or the process, and how the whole teamwork comes together and works for them while
Absolutely.
they continue doing what they know the best and leave the whole money management and generating that alpha on your team.
Yeah.
When the crisis like ILFS, COVID hit, what do the first 24 hours in the Kotak AMC look like? Who's in the room and what are the immediate actions that you take?
So one, everyone knows that they can go up or down in the organization to seek help. So if there's someone who needs help, support, assistance, everyone is available. Number two, you are fully empowered to deal with the situation within the limits which has been given. So if there is a crisis, you need to act. You don't have to wait for phone call or authority or approval from your superior as long as you are operating within your domain. So you are empowered to take decision and you are free to take help. I think those two philosophies will define what happens during crisis.
So I think with this kind of flexibility and freedom, that would not put a person in a panic mode or a reactive mode. Rather than he would look at how he can respond, because the ecosystem created is in a way which helps him to respond to a crisis and not really act in a reactive way. So we are towards the end of our discussion, and it's a world of reels. So I think we have to follow it up with a rapid fire. One financial habit that you think compounds wealth?
Income minus expenses equal to savings. Change that equation to income minus savings equal to expenses. That will compound the wealth.
Okay, I think, savings precedes expenses, and if you can fix that, you will automatically create wealth. One financial habit that's very overrated?
There are multiple, but this whole habit of buying, selling to make money, that's highly overrated. 9 out of 10 people lose money, 1 out of 10 make money.
Yeah, I think this trading is what is very overrated. One thing which AI will never understand.
Human emotions. AI is all about neural network, and emotions does not necessarily respond in the same manner. I think AI will take time to understand emotions.
So I think for people like us who are in business of managing people's emotion rather than their money, which is their fear, greed,
Yeah.
aspirations, anxiety, we will still be in job for some more years.
Absolutely.
One line which you would want to leave Indian investors for the next 10 years.
Don't bet against India.
Oh, nice. So remain invested in
Stay
India.
invested.
So I would want to ask a concluding question. Lot of people, when they came to know that I am, actually going to be talking to you, they had this question. They are all finance enthusiasts, and if they want to be what you are today, what would your advice to be?
I mean, see, some of it is luck and some of it is hard work. Now, luck, I don't know how to build. You inherit one. So, what is in our hand is hard work. And what has helped me reach where I am, I think it's all about that inquisitiveness. I didn't know many things, but I was inquisitive enough to learn. I started my career selling IPOs in merchant banking, moved to learn FX trading, came back and started learning fixed income, eventually moved to equity and real estate, and then moved to sell side again as a business manager, and then came to buy side as business manager. So multiple roles over decades. But every one thing in common, I was inquisitive, willing to learn, and I had no shame in admitting that I didn't know this.
So I think,
Be inquisitive.
yeah, be inquisitive. And like you said, that luck is not in your control, but the one variable which you can control is hard work.
Yes.
And so it's important to have that kind of hard work and that curiosity of keep
Absolutely.
on learning new things. And
Yes.
I think for everyone who's listening, it's not difficult to become you if they follow these principles.
Absolutely. But luck also plays an important role. So always be humble enough to accept that there's someone above who is guiding us.
Yeah. Thanks a lot for taking the time out and talking to us on the compounding mindset.
Thank you, Neil. It was my pleasure.
Thank you so much.